Mainstream Bitcoin adoption continues, slowly but surely, although it is starting to feel like suddenly at some times. And a brand new all-time high puts the "this bull run is already over" crowd to bed. We get into all of that and more on this episode of the Bitcoin Bulletin Podcast.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Guten Tag, buenos dias, Morian, and welcome to episode 225 of the Bitcoin Bulletin Podcast. We are rapidly closing in on 4 years of Bitcoin Bulletins, and of course, 4 years of dollar cost averaging. Later in this episode, we will be making our 208th weekly DCA stack. I know what some of you might be thinking, wait, there are 52 weeks in a year, and 52 times 4 equals 208. But alas, 2024 was a leap year, which gave us one extra Wednesday, so stack 209 will mark the completion of 4 years of testing out the dollar cost average hypothesis. And of course, that should come, or will come, on next Wednesday, July 23rd, which will, of course, be just a couple of days before the true fourth anniversary of the Bitcoin Bulletin Podcast. But speaking of important anniversaries, it seems like it's been longer than that, and I've probably eaten way too many cheeseburgers in the short 2 months. But Steak and Shake reminded us that 2 months ago today, Steak and Shake began accepting Bitcoin payments. May 16th, 2025 is for the history books. Bitcoin Steakburger Day. Bitcoin on May 26th was 103,489. Burgers and shakes continue to deflate. Bitcoin is transforming our enterprise. Thank you, Bitcoiners. Well, thank you, Steak and Shake, and it is nice to see Bitcoin adoption, at least someplace that I went from time to time anyway, and now I can pay in Bitcoin, and I've done that several times at my local Steak and Shake in the last 2 months. Like I said, probably eating too many steak burgers and tallow fries, but you know, if you're going to go out for a cheeseburger and french fries, at least you can do it the Bitcoin way. All right. We do have a lot to talk about today. It's been an interesting day. But before we get into the current events and talk a little bit about that new all-time high, let's take our customary look at Bitcoin's vital statistics. At the time of this recording, we were at block height 905,874, and Bitcoin is ringing in at a US dollar value of 118,840 US dollars. And that means that when you trade those US dollars for Satoshis, each dollar will only get you 841 Satoshis, down from the 899 sats last week, obviously well below the 1,000 sat per dollar mark from a couple weeks ago. But you know, that is the nature of the beast. As the US dollar trends to zero in Bitcoin terms, the number of Satoshis that you will be able to receive for each fiat cuckbuck declines as well. Of course, you are still early. One day we will hit one day sooner rather than later, we'll hit the dollar, the Satoshi penny parity. But eventually, when Bitcoin hits the $100 million mark, which seems crazy far away right now, I know, but $118,000 seemed crazy far away when I began my Bitcoin journey. So it's perhaps not as far away as it might seem, but when that happens, we will reach the dollar sat parity mark. I mean, I can remember when we hit the dollar Bitcoin parity mark, and now we're talking about 841 sats per dollar on our way to the dollar sat parity. But when we do hit dollar sat parity, that means that every dollar you have converted today will get you $841 worth of Bitcoin in those days' purchasing power. But I digress. Bitcoin's current price means its market capitalization is $2.36 trillion, significantly above that $2 trillion mark, which Bitcoin kind of flirted with on and off for a few months when we hit that first new all-time high in January. Well, the all-time high above 100,000 in January. We eclipsed 2.07 trillion US dollars at one point and then slipped back under the $2 trillion mark, where we remained until May, when we poked back above $2 trillion for the first time. And now we're solidly above $2 trillion at 2.36 trillion US dollars. For those of you who continue to value your wealth in shiny yellow rocks, that ancient hedge against inflation, some would call it analog version of Bitcoin, it will currently cost you 35.5 ounces of gold to purchase just one Bitcoin. That is more than 1 kilo of gold, 1.01 kilos, so just barely above a kilo, but above a kilo of gold nonetheless to purchase just one Bitcoin, as even the previously most scarce money on Earth before Bitcoin was discovered also trends to zero in Bitcoin terms. Of course, for those of you who value your wealth in something a little more edible than a round gold coin, one Bitcoin will currently purchase you 6,646 large pepperoni pizzas from Papa John's. That means if you ordered one pizza a day every day, we have now eclipsed the 18-year mark, more than 18 years of one pizza a day every day for just one Bitcoin. Earlier I was talking about the $100 million mark and how that seems so far away. But remember, just back in 2010, when Laszlo Hanya made the world's first real-world Bitcoin purchase, he paid 10,000 Bitcoin for just two Papa John's pizzas. And now one Bitcoin will purchase you 6,646 large pepperoni pizzas from Papa John's. As of course, pizza continues to trend to zero in Bitcoin terms as well. All right, that metric that has been my favorite for most of the history of this podcast, Bitcoin's 24-hour average transaction rate, is humming right along. Currently, we're looking at 4.64 transactions per second on average, significantly above the good old days when I used to say that 3.14 or pi transactions was a healthy amount of on-chain activity. And that doesn't even take into account all those Lightning transactions. For example, if you go to Steak and Shake and you buy a double steak burger with cheese and bacon and a large tallow fries, and you pay in Bitcoin, you'll be paying with a Lightning transaction. So all those Bitcoin purchases at Steak and Shake do not reflect in that 24-hour average transaction rate. And that is pretty exciting. Speaking of all that on-chain activity, the Bitcoin mempools they're absolutely chock full of pending transactions, significantly more so than last DCA Wednesday. Last DCA Wednesday, there were about 2,400 or 2,700 transactions pending, depending on which mempool you were looking at. This week, right now, at this moment, in Clark Moody's mempool dashboard, for instance, there are 30,653 transactions pending in that mempool. And mempool.space is starting to open up a gap with Clark Moody again. They're showing 50,936 transactions pending in their mempool. So more than 15x in just the last 7 days. Of course, a lot of that probably has to do with all the excitement around the new all-time high and all of the Bitcoin that has flowed into the ETFs, or that Michael Saylor and other companies are starting to snap up for their corporate treasuries. But once again, I'm getting a little bit ahead of myself. With all that activity in the mempool, if you do need to send an on-chain transaction, Clark Moody's dashboard is recommending a fee of 12 sats for VByte for a high priority transaction. Although they're saying, Clark Moody's dashboard is saying that a fee of just 1 sat per VByte will be mined within a day. I am scrolling back through numerous transactions here, and the cheapest block I can see was 5 blocks ago, when a fee of 6.36 sats per VByte was the cheapest fee included in that block. So I would not hold my breath on a 1 sat per VByte transaction being mined within a day. Maybe as we head towards the weekend and mempools clear out a little bit, potentially that could happen. But if you have a high priority transaction, I would make sure you do your research on this one, because there's a big difference between 1 sat per VByte and 12 sats per VByte. And you definitely want to make sure that transaction does not get stuck. Especially if you are not using a wallet that has replace by fee enabled. Mempool.space is saying it might be a little bit cheaper for a high priority transaction. They're recommending a fee of 7 sats per VByte for a high priority transaction. That works out to just $1.16 in US dollar terms, which is still really cheap considering that's just a fraction of what it would cost you to send a wire. So still relatively cheap, but nowhere near as cheap as last week when you could send that transaction for just 1 sat per VByte, and it would be mined in the next block for just the equivalent fee of 16 cents per US dollar. I'm looking at the last block that was mined here, and the cheapest fee that was included in the last block, which was mined just seconds ago, was 7.45 sats per VByte. So that 7 sat per VByte fee that mempool.space is recommending would not have been mined in that block. So again, if you're going to roll your own crypto transaction, if you're going to roll your own Bitcoin transaction, make sure that you know what you're doing. Make sure that you have a good idea of exactly how many sats you're going to need to send as a miner fee to make sure that it does get mined in the time frame you have in mind, and that you know how to use replace by fee or child pays for parent, or at least mempool.space's transaction accelerator if, for example, either your transaction gets stuck or your time frame changes. All of a sudden, what might have been a low priority transaction takes on a little more urgency, and you might need to bump that fee. So make sure you're familiar with that if you're going to try and lowball it. If you're using a normie wallet, most normie wallets will not let you set your fee anyway. And of course, they'll have you way overpay. I don't remember which wallet I was toying around with last week, but they were recommending a fee that worked out to like $5.90 in US dollar terms, when mempool.space was saying a high priority fee should only be 16 cents. Of course, if it is a high priority transaction and it's millions or billions of dollars, then, $5 is maybe well worth your while. But the point being, make sure you have the most recent picture of what it's going to cost you before you do send a transaction that on-chain transaction that may or may not be time critical. Since the last Bitcoin Bulletin podcast, the difficulty that it takes to find a Bitcoin block had a relatively sizable increase, more than making up for the decrease that they had previously. Previously, it had gotten 7.5% easier to mine a Bitcoin block as the miners in Texas shut off during the peak of high demand. That has all been erased with an 8% mining difficulty adjustment, so we're back on track with difficulty and hash rate climbing up and to the right, which, when you zoom out, has been the case for the entire history of Bitcoin. We are now 1,326 blocks away from the next mining difficulty adjustment, which happens every 2016 blocks. So we're still less than halfway. We're about 9 days away. In fact, it's estimated that will occur on July 25th. And because that is still more than a week away, the estimates of whether it's going to be an increase and a decrease are kind of all over the charts. Not significantly, but I'm looking at two different sources, and one is saying that we're going to look at another decrease of 0.3%, and another is saying it's going to be a modest increase of 0.01%. I would anticipate, unless we get another huge demand response situation in Texas, that we'll end up with a much more significant increase than just 0.01%. Although I was looking at X earlier this afternoon, and I saw an alert from the National Weather Service that said that there's going to be a heat wave building across the central and southeast United States. And so if we really do get another heat wave in Texas, maybe the miners will switch off and we'll look at a potentially another mining difficulty decrease. Either way, if you're a pleb and your major concern is just the security of Bitcoin or how fast an on-chain transaction will get mined, currently transactions are coming in at 10 minutes and 3 seconds, which is just a little bit slower than that 10-minute average that Bitcoin aims for. But really the difference between 10 minutes and 56 seconds a couple weeks ago when we were looking at a major difficulty decrease, or 9 minutes and 20 seconds last week when we were looking at a major difficulty increase. I mean, the difference between 9 minutes and 20 seconds and 10 minutes and 56 seconds, especially when you consider that these transactions come in randomly. So the next block could be a minute or it could be an hour. I mean, it really just depends. It's really insignificant. But what it does mean is it means that, as I mentioned, that network hash rate is continuing to trend up and to the right, keeping Bitcoin the most powerful computer network ever in the history of mankind. And it means that if you're mining commercially, potentially you're going to look at maybe a little bit less profit, or potentially a little more profit, depending on which way that goes in approximately 9 days. Before we move on to the news, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 app. Podcasting 2.0 allows you to contribute value back to this podcast by either streaming sats on a minute-by-minute basis as you listen, or by sending a boost, which is a shout-out via a Lightning transaction. Either way, because you're using the Lightning Network, you are sending Satoshis back to the podcast, contributing value back for the value that you feel you're receiving by listening. Of course, when you send a boost, we read it on the next episode, and since last DCA Wednesday, we've received 2 boosts, both of which are from Leggy. Leggy sent 2,000 sats 4 days ago and said, now 112.6K. Somehow, this all-time highs are boring without retail going crazy. For me, this is just no bull run yet. Thanks. Followed up a couple of days later by another 1,000 sat boost where Leggy says, has my boost triggered something? Smiley face. 122,000 now. LOL. Leggy didn't clarify whether 122,000 is no longer boring or if you are still bored. Many people have been expressing boredom in this bull run. I try to remind everybody that I get 2017 vibes. I've been getting 2017 vibes. And in 2017, Bitcoin didn't really go crazy until August of 2017. Bitcoin spent the vast majority of 2017 prior to the summer at about $1,000 per Bitcoin. But in the month of June and July, Bitcoin started to tick up. And then the price of Bitcoin more than doubled in August. There was a little bit of a pullback in September. And then Bitcoin just really went ripping in the fall, setting its then all-time high of around $20,000 in December of 2017. And even though each bull run has been a little different, including last bull run, the last cycle with the twin tops of 2021, in general, we haven't seen the ultimate all-time high until late fall or early winter of the year after the halving, which would be this fall. And I wouldn't expect to see things get really exciting until, well, maybe later this month, because since blocks come in a little bit faster and those bull runs have been coming in about the same block difference. So, for example, in 2017, we saw the all-time high in December, but in 2021, it was around the same number of blocks post-halving that we saw the next all-time high, but it happened in November because, of course, the halving happened about a month earlier than the prior halving, because blocks always seem to come in a little bit faster than 10 minutes on average as network hash rate increases. And with an earlier halving comes an earlier human date from when we're a certain number of blocks away from that halving. Either way, Leggy, thank you for both of those boosts. I couldn't help but agree with you that it did seem boring. It's funny how Bitcoin changes you. Even like right now, 122,000. Last DCA Wednesday, when we purchased around $111,000, and that was the highest we'd ever seen Bitcoin on a DCA Wednesday episode. Since then, Bitcoin rocketed all the way to $123,000 for the new all-time high, and then crashed to where we are now in the $118,000 range, which is $7,000 more than it was last DCA Wednesday, but it still seems like a letdown because we're so used to the extremes, the volatility of Bitcoin, that it changes your perspective. Bitcoin changes a lot of things about you, and one of the things it does is it changes that perspective. Imagine 4 years ago thinking 112,000 was boring, or that 122,000 was boring, and don't worry. I believe, and as I've stated firmly over and over again for more than a year now, I mean, I started talking about this before the halving, that things weren't going to get exciting until later this summer, and I still stand by that. So buckle up. The excitement has yet to come. So thank you again, Leggy, for both of those boosts. It's always great to hear from you, to know you're still out there listening and that you appreciate the podcast. Of course, thank you to everyone listening, regardless of where you might find yourself. And speaking of which, our geographic distribution of listeners has remained rather ossified. Our top 10 countries where our listeners reside remains as follows. Number 1, where about 56% of you are listening, a little over half, remains the United States of America. So thank you to all my fellow Americans out there listening. Number 2 remains Singapore, who, as you recall, burst into the top 10 and then rose all the way to the number 2 spot where they remain. So apa kabar, hello, and thank you to those of you listening in Singapore. Number 3 remains Germany, a spot that they've held for a significant chunk of the Bitcoin Bulletin podcast episodes. So Dankeschön, mein Freunds, in Deutschland. Number 4 remains Argentina. So hola, muchas gracias, amigos in Argentina. Number 5 remains Luxembourg. So Dankeschön, mein Freunds in Luxembourg, or Morgen to those of you who speak Luxembourgish. Number 6 remains Canada. So hello and thank you to those of you listening north of the United States. Number 7 remains our cousins across the pond in the UK. So hello and thank you to those of you listening from the United Kingdom. Number 8 remains Spain. So hola, muchas gracias amigos in España. Number 9 remains Australia. So hello and thank you to all of you listening down under. And number 10, rounding out the top 10, remains Mexico. So hola, muchas gracias amigos in Mexico. All right, on to the news. One of these episodes, I'm going to start the news section where the price isn't the news, but oftentimes that is the case, and that is not surprising because even if you are here for the tech or you're here for the freedom aspects of Bitcoin, most people, most newbies, most people post 2016 or so get into Bitcoin because they notice the gains, even if it's just to preserve their wealth because they notice the gains are the result of fiat melting. It is the price that grabs their attention because they're talking about taking their fiat value, their savings, their life savings, their hours of their life that they've worked and converted into paper and keeping as much of that from being inflated away as possible. Of course, Bitcoin has done that and then some, but because of that, because of human nature, price often seems to be leading the news. And of course, the big news was that Bitcoin set a brand new all-time high on Monday, breaching 122,000 US dollars, at least depending where you get your data. For example, on Clark Moody's dashboard, the new all-time high was 123,060 US dollars, and I think I saw $123,200 on a couple of other exchanges. So either way, right around 123,000 US dollars. And it was just last week when we let off the show asking, was this bull run over or was Bitcoin on the verge of a new all-time high? And of course, the answer was Bitcoin was on the verge of a new all-time high. Obviously, I don't have a crystal ball, but I do have faith that Bitcoin will always be one day closer to a new all-time high, as Adam Meister has put it for so many years. I think since like 2013, when he first started doing his One Bitcoin show, something which he's pretty much phased out. It used to be a daily show on YouTube. He hadn't done a show at all for a couple of months. He did one the other day that spent more time ranting and raving about the things going on in the Middle East than it did with Bitcoin, but I understand why that's deeply personal to Adam. And thank you to Adam, if you're out there listening, for all the things you've done to help people maintain that strong hand. Of course, last DCA Wednesday, we purchased at a US dollar price of 111,536 US dollars. So approximately 13 or 12,500 US dollars cheaper than what the new all-time high was, and still significantly cheaper than the 118,000 US dollars we see Bitcoin hovering around right now. Previous to that purchase, our previous Bitcoin Bulletin Podcast all-time high, when you're looking at it on a weekly basis, week over week on Wednesdays, was 109,768 US dollars back on May 21st. Reminder, as I've said numerous times, probably ad nauseum at this point in time, even already more than once on this episode, if this year continues to rhyme with 2017, things are not going to get explosive until later this summer. Remember, Bitcoin didn't really take off until August of 2017 when it more than doubled in price. And then, of course, as I've already mentioned in this episode, it had one of those 25 to 30% pullbacks in September, so much so that even though it started to recover by the end of September 2017, Bitcoin ended the month actually lower. Bitcoin ended September 2017 20% lower than it started. But then it was off to the races again, with Bitcoin going absolutely parabolic, eclipsing 6,000 US dollars before November, eclipsing $10,000 by the end of November, and of course topping out at 20,000 US dollars in December. And if we see anything even remotely like that, things are going to really start ripping. Perhaps as early as the end of this month, because as I mentioned, the halvings occur earlier every year, or have occurred earlier every year. And so maybe we adjust all of our goals ahead approximately a month, which means that the end of July is when we should really start rip-roaring instead of the end of August, which means that maybe the mid to end of August is when we see another retracement before things go absolutely crazy, topping out possibly in October or November of this fall. But again, I don't have a crystal ball. Nobody knows what Bitcoin is going to do. And while this cycle certainly feels more like it did in 2017 than it does in 2021, that's just a feeling. Anything can happen, but so far, I've been talking about this year feeling like 2017 the entire year, and it's continued to do so. Of course, if it does, we're talking about easily 1 million Bitcoin by the end of this fall, which, man, that's even a little more optimistic than I'm feeling, but certainly well within the realm of possibility. And there are OGs out there who are solidly predicting that. One of the things that was making the scuttlebutt on Twitter late this afternoon while I was doing my prep, was a controversy around how much Bitcoin the United States holds. It had been estimated that the United States is custodying around 200,000 Bitcoin, and then the U.S. Marshals released an audit saying they only held around 86,000 Bitcoin. People were saying that this means either the previous administration sold it, or they don't know where the Bitcoin is, or whatever the speculation is, depending on who you were seeing speculating. And that's all it was. It was just a guesswork. Other people have pointed out this is just what the U.S. Marshals says they hold. They only hold Bitcoin that has been forfeited. This isn't Bitcoin that has perhaps been even transferred to the Treasury Department under the new Strategic Bitcoin Reserve. But it also doesn't include all the coins that were seized as a result of the Bitfinex hack, for example, because those coins have not been formally forfeited. So I think that rumor was put to bed, and really, it doesn't matter anyway. It was just something that was generating a lot of potential controversy on Twitter or X late this afternoon. Also this week, it is officially U.S. Crypto Week in the United States government. According to the Motley Fool in an article published today, welcome to Crypto Week. With 2 cryptocurrency-focused bills in the House, this week is the industry officially mainstream. Now, I know you probably don't read the Motley Fool, but I know a lot of boomers who do. They take things like the Motley Fool very seriously. So when you see the Motley Fool talking about Bitcoin and crypto and asking if it's gone mainstream, you know, the majority of the wealth in this country is held by the boomers, and they read this sort of thing. And so you should be paying attention too, because it's what the boomers are paying attention to. But the article says Bitcoin broke the 120,000 barrier on Monday, July 14th, as what's been dubbed Crypto Week kicked off in Washington, D.C. Ethereum pushed above the $3,000 line for the first time since February, and crypto's total market cap reached a new high of over $3.8 trillion US dollars. As Cointelegraph points out, that's close to the UK's GDP. What's driving the increase? In part, it was optimism about regulatory change. The House had planned to discuss 3 crypto bills between July 14th and 18th: the Genius Act, designed to regulate stablecoins; the Digital Asset Market Clarity Act, which sets clear definitions of what a security, cryptocurrency, or stablecoin is; and the No CBDC Act, which would essentially prevent the Fed from launching a digital dollar. In reality, Crypto Week fizzled on Tuesday after failing to get enough votes in the House to move to debate. Nonetheless, the very fact that these legislative changes are on the table and have progressed so far so quickly raises the question of whether the industry is now officially mainstream. Well, I mean, we've certainly seen a lot of mainstream adoption, but this is mainstream potentially. You know, we talk about the Overton window and how far the Overton window has shifted just since the inauguration of Donald Trump, going from an administration that was openly hostile towards Bitcoin, with Elizabeth Warren setting monetary policy with her anti-crypto army, with Operation Choke Point 2.0, with SAB 121 targeting banks, etc. And now we're talking about Crypto Week in the U.S. House of Representatives, and we're talking about a boomer publication like the Motley Fool raising the question of whether or not Bitcoin has gone mainstream. So the Overton window shifted for us a long time ago. It started shifting for most normies shortly thereafter that, and now apparently it is even shifting for the boomers. And that's a big deal, because remember, if you're 65, 70, 80 or older and you're set in your ways and you're retired, you just want to ride out your golden years, you're not really open to change. And the fact that they're reading about it really shows exactly how mainstream Bitcoin is becoming and how quickly it is becoming mainstream. In another sign that Bitcoin has in fact got mainstream, and we spoke about this in a previous episode when it was announced, but now it's officially happened. The Financial Times reported yesterday, Standard Chartered launches crypto trading for clients. Remember we said that Standard Chartered was going to allow institutional Bitcoin trading for their customers, and now it's officially happened. The article says Standard Chartered has begun allowing institutional clients to directly trade Bitcoin and Ether, becoming the first major bank to enable spot cryptocurrency transactions. The London-based lender said it had launched Bitcoin dollar and Ether dollar trading from Tuesday for institutional clients such as corporates, asset managers, and investors, and soon would add so-called non-deliverable forwards, contracts in which no physical settlement of the currencies takes place. The move highlights how crypto is becoming increasingly entwined with mainstream finance and comes as more traditional companies seek to compete with specialist crypto exchanges where the majority of trading takes place at present. So that is a big deal. That isn't not here in the United States, but it's in the United Kingdom, and coming soon to a bank near you, regardless of what country you find yourself in. And global adoption keeps rolling right along, with an article in the Times of India entitled "Crypto is the New Gold: Why India's Rich Are Buying Bitcoin." Now, if you're not familiar, India per capita holds more gold than almost anywhere else in the world. People in India have been using gold as their store of value mainstream for a very long time, and now apparently they're starting to make an ever-increasing shift into Bitcoin. The article says, as Indian equities stall, gold steadies, and fixed income returns remain uninspiring, a new trend is emerging around the country's wealthiest investors, a growing appetite for cryptocurrencies. High net worth individuals, family offices, and institutional players are quietly reshaping their portfolios, steering capital towards digital assets like Bitcoin and Ethereum, report in the Economic Times said. The shift has picked up serious pace over the past 6 months, particularly after the return of Donald Trump as U.S. president. So, another Overton shift, an Overton window shift, this time in India, the most populous country in the world, a country that had traditionally stored their value in gold, shifting some of that value into Bitcoin. Of course, not surprising, because we know that Bitcoin is basically like digital gold. It's everything. It has every property that makes gold, that had made gold the traditional store of value for thousands of years, and of course improves upon each and every one of those attributes. So this shouldn't surprise anybody, but it's simply a validation of what we already know, and that is that Bitcoin adoption is accelerating. In Australia, where enough of you are listening to keep you at the number 9 spot in the top 10 countries by listeners, news.com.eu is reporting, and actually they've got this dated as tomorrow, July 17th, but of course that's because it is already Thursday in Australia. Quote, Bitcoin holders can now use cryptocurrency as collateral for mortgages. Crypto investors will no longer have to choose between owning Bitcoin and buying a home, with the first Bitcoin-backed home loan launching in Australia. Block Earner said it would become Australia's first Bitcoin-backed home loan provider after winning a lengthy court case with ASIC, successfully arguing it did not require a financial services license to offer its products. In a statement, Block Earner said it would continue to work collaboratively with the regulators to bring clear benefit to Australian consumers. Block Earner continues to operate business as usual and remains fully committed to compliance, innovation, and building products that benefit Australian consumers, it said. With the court proceedings out of the way, Block Earner is set to launch Australia's first Bitcoin-backed loan, which it says, by recognizing Bitcoin as a legitimate asset class, will help with Australia's housing affordability woes. Traditionally, affordability metrics based on wage growth and Australian dollar figures suggest a worsening housing crisis, Block Earner said. But when homes are priced in inflation-resistant assets such as Bitcoin and gold, the picture shifts, and long-term holders of these assets may find their relative purchasing power has increased. In 2016, the average Australian home cost 627 Bitcoin, or approximately 350 ounces of gold. But by 2024, that had dropped to just 4.3 Bitcoin, or approximately 170 ounces of gold. So they're noticing that everything trends to zero in Bitcoin terms, including houses. The article continues. Block Earner said its Bitcoin-backed home loan provided an inclusive asset-backed path for Bitcoin holders, from Bitcoin holder to homeowner, allowing people to enter the property market without having to sell their Bitcoin. Block Earner chief executive and co-founder Charlie Caraborga said the launch of crypto-backed home loans was a turning point for property finance and digital assets. Crypto holders should not have to choose between holding Bitcoin and buying a home, he said. We're giving them a smarter option, a way to put crypto to work without giving it up. This product isn't just innovative, it's inevitable. Boy, that article touches a few things that we talk about. In hindsight, it was inevitable. Bitcoin holding its value, Bitcoin being a hedge against inflation, Bitcoin being pristine collateral, and of course, everything trending to zero in Bitcoin terms. And wrapping it all up with showing how in Australia now, you can leverage your Bitcoin without selling it to help purchase a home. Pretty cool. And the sort of thing we're starting to see happen here in the United States as well. And again, speaking of inevitability, something we'll see everywhere in the world as more banks become brave enough to try it, as they begin to play follow the leader with those banks and companies that blaze the trail, because obviously Bitcoin is the most pristine collateral ever discovered. All right, on to what makes today and every Wednesday special, and that is that today is DCA Wednesday. What is DCA, you might ask? Well, DCA is short for dollar cost averaging. You're probably not asking it if you listen to the first part of the podcast where we spoke about how we're wrapping up almost 4 years of dollar cost averaging. But dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals regardless of price. For example, we set our equal portion at just $20 and we chose our regular interval as weekly, once a week on Wednesdays to be specific. We started all the way back on July 28th, 2021, just under 4 years ago, and we have stacked the ensuing 207 Wednesdays. This will be our 208th Wednesday stacking Bitcoin. And in those 207 previous stacks, we converted a total of $4,140, again at just $20 a week, into a stack of more than 0.1 Bitcoin. 10,821,618 Satoshis to be exact, currently worth around $12,000, which is not too shabby considering we converted only $4,140 into that stack. To grow today's stack, as has been the case the last couple weeks, we are going to use the Strike app. We began this DCA Wednesday series using the Cash App and used it for almost all of the first 4 years. But alas, Cash App more than doubled their fees to the point where Cash App was always a little more expensive than most exchanges, most other places you could purchase Bitcoin. But they were just so convenient. There were other things I liked about Cash App that were making it worth paying the slightly higher fee. But when they doubled that fee, it was just no longer worth it. Neither Cash App nor Strike are sponsors of this show, and I'm not recommending you use Cash App or Strike. This, again, is one of those you do you things. Cash App and Strike might not even be available where you're at, so do a little bit of research. Pick a service that is relatively mainstream where you're at, not something that you've just heard about it, on some obscure Reddit post somewhere, but one of the big name exchanges. And most importantly, get that Bitcoin off the exchange as soon as practical, because it doesn't really matter if the exchange is going to have longevity or not. If they're not holding your Bitcoin, they can't take it from you. They can't rug you. So I've got Strike open. I've got a little more than $20 on Strike because I was buying all the way up to the all-time high and buying this dip. Of course, those sats that I buy outside of the podcast don't count in the podcast total because we are testing dollar cost averaging, and I don't want to taint that either to the positive upside or the downside by including our buying the dip sort of stacks. But nonetheless, I've got money on Strike already, so it's just a matter of tapping buy, entering $20, Tapping OK. And boom, just like that, we've added another 16,602 sats to that stack. That is the first time our $20 got us less than 17,000 sats. I think last week, 17,000 something was the first time we'd only gotten 17,000 sats for our stack. Again, that's just the nature of the beast. As the US dollar trends to zero, we're going to get fewer and fewer Satoshis for our US dollar or whatever fiat currency you're trading for Bitcoin. But those 16,602 sats bring our stack up to 10,838,220 Satoshis, currently worth 12,932 US dollars. Not too shabby considering we've converted just 4,160 US dollars now into Bitcoin. As we look forward to new all-time highs, when Bitcoin eventually hits the next major milestone, which would be about the 200,000 US dollar mark, our current stack would have a US dollar value of $21,667.44, which would be just practically an unbelievable return for the average normie for just 4,160 US dollars. Of course, when Bitcoin hits that 1 million US dollar mark, which it might do this run, there are certainly those who predict it will. I always thought if you had to ask me a couple years ago that we'd have at least one more cycle before we break the $1 million mark, but I also don't have a crystal ball. If we continue to rhyme with 2017, as much as $2 million is on the table. So 1 million would certainly not be unheard of. But when we eventually hit the $1 million US dollar Bitcoin mark, our current stack, without adding one more Satoshi, would have a US dollar value of $108,382.20. Of course, Adam Back Bitcoin OG, who's referenced in the white paper no less, said that he believes by 2032 Bitcoin will reach 10 million US dollars. When that happens, our current stack will be worth more than 1 million US dollars, 1,083,822 US dollars to be exact. All of a sudden, life-changing money. And of course, Fidelity's director of global macro, Jurian Timmer, said that they believe that by the year 2038, one Bitcoin will be worth more than 1 billion US dollars. Now that's 10x even the Bitcoin dollar parity we were talking about early in the episode. But if and when Fidelity Investments is correct, our current stack would have a mind-boggling fiat equivalent value, US dollar equivalent value of $108,382,200 US dollars. And even for Michael Saylor and the world's current elite, that is a significant. I'm gonna say that wouldn't necessarily be life altering for Michael Saylor, but he could buy another yacht or another private jet. And for everyone I know personally, $108 million would be beyond life changing. We're certainly talking generational wealth. And that is not too shabby considering we have converted just 4,160 US dollars into Bitcoin, and we did so investing just 20 US dollars a week. All right, before I go, I would once again like to ask you to help support this podcast. Of course, you can help support this podcast like Leggy did with the value for value method by streaming sats as you listen or by sending us a boost. But you can also support this podcast simply by feeding that algorithm monster, which will help boost this podcast in the rankings. The easiest way you can do that is by rating or reviewing this podcast. Of course, a 5-star review would be phenomenal. But you can also help by sharing this podcast with a friend or family member. Heck, that might even boost your country in the standings. There are plenty of countries that are only 1 or 2 listeners away from maybe bumping the country that's above it, and that might be fun to see depending on where you're listening. Of course, you can also feed that algorithm monster by following us on Twitter. On Twitter or X, we are at BTC Bulletin Pod. We get way more listens than we have Twitter followers. So I know some of you listening out there are not following us on Twitter. If you don't use Twitter or X, that's understandable. But if you do use Twitter or X, please give us a follow. Simply a matter of entering at BTC Bulletin Pod and clicking follow. That means that other normies are more likely to see our tweets, and we're not going to spam you. I haven't posted all week, and I'm going to post here in a few minutes when I get this podcast uploaded. But Maybe there's someone out there who thinks that they're too late, that they only have a couple $100 and that they can't buy a significant amount of Bitcoin. And by following us on Twitter, all of a sudden they'll find out about this podcast and they'll realize that at just $20 a week, we've built a stack of Bitcoin that will put us solidly in the top 10% globally when we do achieve hyper Bitcoinization. Certainly, it will show to them that they're not too late. Of course, I simply love hearing from you, and you don't have to send a shout out. You can also send me a DM because, again, if you're following us on Twitter at BTC Bulletin Pod, my DMs are open, and I do reply to DMs if they're not spam. Of course, if you don't use Twitter and you don't have the means to send a boost, you can always send me a good old-fashioned email. My email is also open. I do read and reply to all my emails that are not spam. The email, of course, is Bitcoin Bulletin, like the show, Bitcoin Bulletin at protonmail.com. That's Bitcoin Bulletin at protonmail.com. Of course, most importantly, don't forget to join us next Wednesday, which is going to be a big anniversary. But of course, next Wednesday and every Wednesday when we continue our Bitcoin journey together, stacking just $20 worth of Satoshis a week. But until that time, keep on stacking those sats, you sexy sat stackers.